Good morning, traders. It is Thursday, December 18th, 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A quick look at the overnight news. Few things to note that have driven action overnight. Equity. This is a summary from TradeTheNews.com. Equity markets open higher as traders assess recent policy moves by the Fed and the Swiss National Bank. Gains on the FTSE 100 capped by ex-dividends. Greek markets open slightly lower with elections in focus. Russian equities trade higher amid comments from Putin. And German IFO data mixed. Resource-related companies trade higher amid rise in oil prices. The Swiss National Bank moves to negative interest rates on deposits. It maintained its floor in the euro Swiss franc cross at 1.2. Puts pressure on ECB to enact QE. ECB QE could come sooner than expected and be large, and that the effective date of the negative deposit from the SNB corresponds to the next ECB rate decision. So this is a little bit of a chess move here by the Swiss National Bank. Remember, in my opinion, for the last, how long have I been trading? About 15 years professionally. I believe there's been a currency war between sovereign nations, and this is a move by the Swiss here to push against what the ECB has to do. Also, it is said that the Swiss National Bank made this unannounced negative interest rate move to counteract flows from Russia as people escape the ruble and are causing the currency to appreciate too quickly. Germany, December IFO survey mixed, but noted a change in trend in Germany. German economy was increasingly becoming positive. So that's good news from Germany. Decline in oil prices and lower euro currency were seasonal gifts to the German economy. U.S. dollar maintained the firm tone following the Wednesday FOMC decision and language change. Better European data registered in the session did little to dent the greenback sentiment. Saudis are saying that it is very difficult, if not impossible, to curb oil supply at the moment. Believes prices will stabilize and recover on their own. U.S. initial jobless claims, 289 versus 295 estimated. A little bit better. Continuing claims, 2.373 million versus 2.44 million estimated. Also better. Looking ahead, there was something I read somewhere about, incidentally, for those of you who trade the ruble, I read somewhere that there was legislation, I believe, in Russia that is allowing for 1 trillion rubles of aid to banks, to Russian banks or something. I couldn't find the details on that, but I saw that somewhere. I believe it was on ITC Markets or something. Looking ahead at the releases, at 8:45 Central, 15 minutes after the open, U.S. December preliminary market services PMI expected at 56.3, last 56.2. Composite PMI, there's no estimate, 56.1 prior. At 9 o'clock, EU leaders begin a two-day summit in Brussels. Begin a two-day summit in Brussels with ECB Chief Draghi attending, so we'll be looking out for any comments made or press releases made during this two-day summit. At 9 o'clock, also, we have U.S. December Philadelphia Fed at 26 estimate. We also have leading index at 0.6. This one is of special interest to the Fed here. 0.6 estimate, 0.9 prior. At 9:30, we have natty gas inventories. At 10 o'clock Central, we have the Treasury announcing 2, 5, and 7-year notes. Also, 2-year FRNs. At noon, the Treasury is selling 16 billion 5-year tips reopening. And then this evening, the Bank of Japan's releasing its monetary policy statement. I don't have a time for that. So let's move to the technical picture here. 5 minutes is plenty enough for the news. First of all, I've received a ton of emails from yesterday's Trader Bite. A lot of questions, and finally, it seems like people have somehow the explanation I made yesterday made it click for some people as to how these volume profiles might work for them. I appreciate your comments, but please understand that it takes me a while to get through emails, especially long ones. It can be quite daunting. But if you're looking for more information or a little bit more organized approach to these volume profiles and how I'm looking at things, it's all on futurestrader71.com. You might want to take a look at the webinars if you want an organized set. If not, just go to resources and chat archive and go through the very, very old chats, and they kind of walk through one by one, walk through the process. I used to do these impromptu chats online for followers at the very beginning in 09, 10, and that covers a lot of it. This is the composite. The composite chart is very simple. It is an RTH only chart, meaning day session only, pit session only, and each bar represents 1 day's trading. These profiles here, you can see the box from which the profile is made. These profiles represent volume at every price, and they're called micro composites because they take a fixed set of bars and they show you the volume profile on them. This on the right is the composite. This is the volume composite here. This is basically taking all the volume that has traded at every price going back to October 9th, 2003. So that's the composite. These are micro composites, and then individually each day has a volume profile. The black lines on these micro composites are the most traded price of that micro composite. So the reason I draw these micro composites is to see inside of each bar as a group, to see the volume, to see where the market has traded or had interest in prices. Price action alone, remember I started as a scalper, as a high volume scalper in equities, then futures. Really glad I switched to futures. I used to look at price action alone, but with volume profiles, you can see not only the price action, you can see where the executions happen. And it's very important to note the high volume nodes and the low volume nodes. Those represent acceptance and rejection. An example of that is this high volume, this point of control from this composite here was basically what was tested early in the day. On this day here, the 9th of December, before the market found support. The market then pushed into the low of the prior day and value low of that micro composite, and so on and so forth. This here, you can see that the market tested up and came back down, and then the next day we basically moved from one microcomposite point of control to the next microcomposite point of control. Same thing with yesterday. So in addition to this, on this chart, I have a microcomposite that encompasses all volume in this region, and I have it represented in dots. And you could see that right now, well, most of the night, the market was stuck on this second highest volume node, which was the area here represented by about 2025 to about 2030. And incidentally, that's where the overnight point of control is. When I came in this morning, that's where the market was stuck. So the market generally moves from high volume node to high volume node, and it tests the low volume node in between. And those are key areas for me to look at. So looking at what we did yesterday, Yesterday was a pretty simple read. Uh, Coming into the market, as you those of you who are on the Trader Bite, you witnessed basically the market doing pretty much exactly what was planned, which was to have responsive buying back to the point of control. We have 2 points of control. These 2 days have 2 points of control that are the same, basically within a few ticks of each other. When we combine the volume of those 2 days, we get a composite point of control of 83.50, 83 even, and that's the initial test. These are 60-minute bars. So if I break it down to 15 minutes, you'll see that the initial test after the open and test lower, you can see that the initial test right up to that black bar, boom, right there, and then we get the pullback almost to the open. This looked fairly weak. There was a fair amount of divergence between where the S&P was going and transports, and also I think the Nasdaq as well. There are some correlations with these products, but I wouldn't trade one off the other. So once it found a bid, it pushed through. The initial target was 83. The secondary target was 93, with a small target at 1990. It pushed right into this 93-quarter low volume node. It pushed right into it by 4 ticks, pulls back almost to the mid at the IB high, lingers around, and then we finally get the FOMC, which pushes us to 2007.75, and then ultimately the market's held back 1 tick from the prior day's high. So this day here, yesterday, represents a third day of balance in the zone. Notice these gray areas are what's called the value area. The gray areas represent 70% of the volume, or 1 standard deviation of all volume, which is what we statistically call normal. Put that between quotes, air quotes, and you can see the value is in line with the point of control right in the prior day's value. So these 3 days represent balance, and for that reason, we extend this out. We extend this volume profile out to get 87 as the microcomposite point of control, value high at 96, value low at 74. The market's trading well above this at 34 right now, but this is going to be important for us when we come back to this area in the near future. So this is what the market left us with. We had a weak high on the close, a weakish high on the close. Pretty good buying on the delta on the close, meaning there are many more contracts traded at the offer, meaning aggressive buyers, versus on the bid. On the close yesterday, it's just lingered up here with no taper. See how the volume tapers at the bottom of this profile? This is normal. As prices get too low, there are fewer and fewer and fewer suppliers of the commodity until it shuts off, and then buyers step in to take it back up, and generally it tapers at the top as well. Lately, we haven't been tapering at the top very well, and that's an additional thing that portends that's predicting higher prices, which we got. So right now we're trading inside of last Thursday's profile. So that's our template day. We call that a template day because it provides it is the most recent auction. It's the freshest auction we have in this area. So unfortunately, though, this profile is is incredibly blunt. It's just, there's really no value here. Again, we're trading 2034, value low shown at 32.50, but there's no distribution or acceptance of this profile or the day before. So the only thing we can glean from this profile here is the point of control, which is at 47. That becomes our key target for the day. That's about 13 points up, which is well within range of being attained. So the key target for today on the upside is this 47 even. Okay. Now, what about today? What are we looking at for today? Today we're gapping up. The gap is at, assuming it opens here, the gap's at 34. We closed at about 07, 08, 2008. That is very high. The gap is a fairly high number. The probability of filling the gap is somewhere around 19%. Looking back 1,400 days, it's about 19%. Past performance not indicative of future results. So today the expectation is an open auction out of range. There's an elevated probability of an open drive because of where we are. However, we're still in the bigger balance. So I'm looking for the market to open, take out the overnight high early, take care of the overnight stat, and then I'm looking for sellers to step back in and try to push this lower. There's a high volume node. Remember that area from 25 to about 30. High volume node here. I expect a battle to take place at the overnight point of control in this high volume node. But I expect that there will be sellers will likely see prices as above value and will continue to try to sell back into this balance. We have beautiful balance here to look at. I mean, these 3 days, market tests lower, attempts to pull back, holds the low. Market pushes all the way through the prior day's range, sells off, puts in a lower low. Market opens and pushes to cancel out what it did the day before. I'm sure a lot of accounts got hurt by this, and a lot of accounts have increased by this action. But overall, the point is that it's going to leave a scar or some fond memories for many traders. So I expect that the market's going to remember these prices, and I'm looking for responsive selling to come back to value. And I don't think it's going to get down to 1980, although anything can happen. I expect overall for the market to auction as it normally does, which is to take out the nearest price of interest and then to check the prior auction before it's likely to continue higher. Okay, so I'm looking for a push through overnight high, responsive selling down into the 20s, and then I'm looking for it to base and then to continue higher with the upper target at 2047 on the upside, and then on the low side it would be 2014. Now remember, 2014 is the over underline. I covered this on Day Trading Radio on Monday. This is the price that the market really needed to hold down for sellers to stay dominant. We're above there. We're working our way through higher prices, so the expectation is for it to continue to float higher. So overall, we're working in this profile. So 2047 is important. You can see it's an MCHVN. Next up, we have 2050. Once we get into this, this MC here, this microcomposite, this balance zone, once we get into this balance zone and hold it, it is likely to test value low, the point of control, and new highs are on deck at that point. It's too early to tell. So the resistance is likely to be up here in 2040 this morning once we, if it does get an open drive and start to push, or if it gives us a hypo 2 is for it to give us a small responsive sell interest down into the 28, 29 HVN and then start to turn and go higher. That would be my second strategy. So I need to watch and wait for the market to tell us what it wants this morning before stepping in. That's what I suggest. And then initially we're looking for resistance in this area to 2040, 2041, and once it regains this microcomposite area, then I'm looking at what's happening here, and then once it gets into this 53, 54, which is the next major resistance up, that I'm looking for to sell against this on the first try. But once it pushes through, new highs are on deck. Okay. Anyway, I know that's a lot of information, but I'll be commenting on Twitter as the market rolls forward, and hopefully that leaves you with an idea for the day. Again, the whole point of these trader bites is to kind of give you a perspective of what I've been doing. I've been doing this for a while, trading professionally for a while, and it's really the point I'm trying to push through here, and I think successfully doing so, is that you should not be approaching the market without some sort of strategy. The goal here is not for me to be right or wrong. This isn't about right or wrong. This is about getting into alignment with the market. And if you can get into alignment with the market, then your task becomes to take the entry while defining risk, and then to let the trade do what it's got to do, and having a strong hand in the trade by having a good idea of what the big picture is and what the story is and how it's unraveling. Sorry, I'm still fighting a cold. So that's the goal here. Hopefully, you are defining your risk. I know a lot of people are not, and that's why all day long we hear our risk alarms going off at stage 5. But it's gotten a lot better over the years as people take risk seriously. So I'll leave you with that. Remember, the markets are thinner, which means they require more patience. You really have to lean on your probabilities. You have to use a wider stop, I think, and really you have to wait for something that gives you an advantage. Just because the market's fluttering around does not mean that you need to be a part of the action. This is not a casino. There is no ding, 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 ding sound that's supposed to bring you into the market. It's all cold, hard probabilities and aligning yourself with what the market's trying to do. Okay, so if you want to gamble, hit Vegas or Macau or wherever you want to go, Monte Carlo. If you want to trade, focus on defining risk, determining what is more likely to happen over another so that you have a positive probability, and then let the trade do what it's got to do. Good luck.